I lost $73,000 last week. Now I'm all about staying the course and everything, but ouch. For real though, it's all good. We build quality systems for all market conditions to where price fluctuations aren't that scary with the right temperament. In this video, we'll expand on that idea and I'll share all the details about this portfolio that caught fire. And not the good kind of fire that we get after knocking down a few threes. We need to get out the fire hose for this one. As always, we'll get into the portfolios, value by holding, all new transactions in August, the dividends received, a HODL factory update, my individual stocks that I hold and how they compare to the market, and any future strategy changes. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please stun that like button, subscribe if you haven't already, and drop me a comment down below with anything that comes to mind. I try to keep these little promos short, but we have a legitimate Seeking Alpha change this week. I have the same Seeking Alpha affiliate link in the description below that I always talk about that you can use to support the channel, and more importantly, and I genuinely mean that, to save yourself money on a Seeking Alpha premium subscription. Major price changes are coming soon, and you may want to get in if you've been on the fence. And I'm not trying to push you or sell you, but let me just show you what's happening. The standard price for Seeking Alpha Premium is now $299 a year. My affiliate link will keep the price at $214 for your first full year, and that'll be active until October 1st. If that link is used, the full second year will only cost $239. After October 1st, the first year will be $269, and then $299 for all years after that. One more thing for you. Let's grow. Market insights. I made my weekly market post for the channel members last week, and I had a couple great replies that I wanted to highlight in this video. My post basically went something like, I lost $73,000 last week. Ouch. But it's all good because we built a system to handle things like this, blah, blah, blah. And then of course I went on to post all my buys that week as well, which is the main purpose of the post, along with my thoughts. But let me show you what a couple of the channel members had to say. The first comment came from Slammer6789, who's been a consistent member in the comments and great for the community. The comment said, I have my auto weekly buys set to execute on Wednesday every week. Any thoughts on red days to jump in a little extra? End of last week, I grabbed a couple extra shares of the S&P 500 and DGRO. Doesn't feel like market timing if I'm only getting a little more of a bargain. And the other comment I wanted to touch on was from Eric J. He said, it's pretty typical for September to be red. I heard some good advice from a talking head to take profits now before it gets worse. My reaction, I don't care if we're red or green. Just keep buying. The stock market is like a casino with all the flashing lights and sounds. That is an amazingly accurate comment from an OG channel member, I might add. I agree wholeheartedly with both of those comments, in fact, and it reminded me how powerful a simple system of target allocations, including cash in that mix, can be over time. Your portfolio will automatically buy more shares of ETFs when the market drops on red days. Let's look at an example. In this quick example, we're saying that we start with $10,000 here for our total portfolio value. And then the portfolio allocations, this is our target allocations here. We're going to put 30% into VGT, 30% into VU, 30% into SCHD, and 10% into cash. Looks familiar. So on the day you put it in, you buy up your positions, and of course, they're perfectly weighted. Now, if time passed, say you put in $500 a month. So I have a $500 contribution down here. If nothing changed, right? So VGT, VU, SCHD, and cash all did the exact same relative. Nothing dropped, nothing went up. Then when you put in your $500 that month, your new total portfolio value is now $10,500. Your $10,000 right here, plus the new $500, you'd have $10,500, and $50 of the 500, or 10%, would ultimately go to cash, your money market of choice, or wherever you hold your cash, high yield savings account, and $450 would go into your exact allocations. But let's say VGT crashed. It was down 10%. And let's say that VU was down 5% and SCHD was down 5%, and your cash stayed the same. So from the time you invested into these positions, they're now worth $9,400, and cash is now 10.6% of your overall portfolio. So you're cash heavy compared to your goals. Now, when you put in that $500 that coming month, when you cost average in, you now have $9,900, and your new cash target is $990, and that's 10% of your total portfolio value. So to cash would be negative $10 of your 500. In other words, you would be putting $510 into your allocations, and it looks like VGT is the underweight one. So you put a chunk of money towards VGT, AKA you're buying the comparative dip within your portfolio. If everything was going to the moon, say VGT was up 20%, the market was up 15, and SHD was up 10, and cash was flat, now all of a sudden you're at 8.8% cash, and your portfolio is worth $11,350. So after the 500, you'd have $11,850. The new target cash is $1185. So you would put in $185 into cash, and only, I should have put another thing here, only $315 into your contributions. It doesn't always feel like it in the moment, but sticking to your target allocations like a robot will automatically buy the comparative dip 100% of the time within your portfolio. It is literally impossible to screw this up if you buy the underweight positions. Ignore that gut and let that portfolio grow. Speaking of a portfolio that forgot to grow, let's look at mine. Portfolio overview. We'll hop right into my accounts and the tracking spreadsheet. We're gonna start this month directly out in Seeking Alpha where we aggregate. We're not gonna take the time to look at E-Trade this time. We'll still jump over to M1 to show the HODL factory stats. In E-Trade, and I'll sort these by value here, we have similar holdings. We've picked up a few shares, which we'll discuss soon in the new transaction section, but we have SCHD at 4,425 shares. That's at an average cost of $72.75. It's worth $365,000, and it's out there in my taxable account for those juicy qualified dividends. And then we have 500 shares of VGT at an average cost of $246.49 per share. You can see that the total value here is $280,790. It's in my IRA to take advantage of that growth and reduce those taxes long term. JEPQ is in my taxable because I need the cash now. Now, of course, it'd be better in an IRA in theory if I was over 59.5 because it's ordinary income. So it actually adds to the taxable income, which is not a good thing. But in my case, I need access to it. We have 2,075 shares at an average cost of $49.50 a share, and it's worth $110,307. My money market within E-Trade is at $93,557, and that combines with some other cash that will roll up later on the spreadsheet. QQQM is at $83,289, and that's good for 432 shares. I gotta fix that number for my OCD. At an average cost of $190.55. It finally turned green overall. It's a relatively new position, but this was red as of recently. And then speaking of a sea of red, IBIT, which we've been slowly accumulating, especially since we've closed up my online crypto broker a couple months ago, is at 1,050 shares, 36 even cost per share. And you can see that's upside down a little, and it's worth $34,440. That does it for E-Trade. E-Trade clocks in at a total of $967,000. And then the 401k and HSA is my wife's work stuff. So we have 770 shares of VU, or that's what the equivalent is of what we actually hold, and it's worth $392,400. And then with VUG, she has 83.5 shares, and that is worth almost $31,000. The HSA here, I should have said that. VUG is in a HSA, and VU is in the 401k, with a huge company match, by the way. They add up to $423,000. At the HODL Factory, I'm not going to expand here because we're going to dive in deeper. It's currently at $14,714, and then checking and other boring stuff you don't care about, just paying bills and things like that, is at $10,377. Let's hop over to the HODL Factory. I started making quarterly updates for the HODL Factory that will dive way deeper into the specific individual positions. You can see them at any time out there on my spreadsheets. They're free for everyone. Link down below in the description for a Google or Excel version of them if you want to dive deeper into the data. But I'm just going to show you the high-level scorecard. So I'm out here in M1 Finance, and you can see we're on the HODL Factory, and we're currently on the 1-day tab. You can see today, which is Wednesday, we lost to the market, 0.68% to 1.03. And this is a money-weighted return, so it assesses how we've done versus the market from a decision-making perspective. I always like to start with year to date. So I will say the HODL has fallen short of the market, I think each of the last 6 days, but on the year, it's still up 22.26% in the green compared to the market, VU's 15.24%. So we are winning still on the year. If we zoom it out a full year, we're up 39.6% to the market's 28.17. And then we're gonna scooch it out to the total, and we started this fund on 4/20/2023. Lifetime, the HODL Factory is up 56.3% to the market's 39. It's closed the gap on us. We're still ahead, but things have gotten a little tighter lately, so we need to step our game up. And by we, I mean Hutch and I, who's my friend that co-manages the HODL Factory with me. Now we're out here on the spreadsheet that brings everything together for me to help me make informed purchasing decisions. So I list all the stuff you guys have already seen in Seeking Alpha down each one of these rows, and I put an updated balance each week. And you can see my total. I do this every Friday, and the one we were just looking at is the next Wednesday. Our total was a lot higher out there in Seeking Alpha, so it's been a good couple days, but oh boy, it was not good as of this Friday, my last official update. And that's the number I use for these videos. So all I do is enter these in, and this spreadsheet's out there for free for everyone. I think it's a great one, and you may enjoy using it. So feel free to download it. Link in the description below if you want to start tracking your own portfolio. So after entering these in here, we're gonna go through what it does for us. So the first tab we have is our allocations tab. This shows what percent of our overall portfolio across all accounts each holding is. And then to further that, we have it by type as well, because growth, for example, has VGT, QQQM, and VUG. And I like to look at these as a group. So I want to see my growth ETFs have $376,000 and they're 27.3% of the overall portfolio. This is actually the buying guide. This just shows all the positions in their detail. The S&P 500 is my largest holding at 27.8, and that's that 401k. And then growth, like I just went over, is 27.3, and value, which is SCHD, that's the only current value holding I have, is 362,000. I try to keep these three ETF categories even with my modern 3-fund portfolio I talk about on the channel a lot. So right now I would pick up SCHD, and it's been like that for a while, most of the last couple of years. And then cash flow is JEPQ, and cash is the money market plus checking. Crypto is IBIT, and I want to keep this is a little spoiler alert for later in the video, but I think I'm going to up this to buy up to 3% and sell long-term capital gains at over 5%. More to come on that. And my stocks, which are is the HODL Factory, is at 1% still. They're slowly building. Had to drop that down to $100 a month, but I'm working on it. So this is the allocations, and then I like to look at a portfolio value by month. This just shows how you trend over time. And as you can see, 2024 is our green bars, and they've been looking pretty nice. Now, we only have one update in September. That's the one I just did, and that's the 1.378. Technically, this video is about August. So our average portfolio value for the month of August August was $1,414,000. It looks like we were down a touch compared to the month before, but we're the second highest we've ever been. And with all the market turmoil, really that's pretty good. That's what staying the course does, and just buying up those target allocations and not panicking. These bars will drop, but then they go up. You can see 2022 got rough here for a bit, but ultimately, here we are. And one of my main reasons for making the channel, it's not about me. It's about the fact that anyone can do this. These numbers will be 3 million in a few years. We're gonna get there day by day, week by week. The last thing I wanna show is my projections tab. And this is pretty neat because what you can do is you can put in your date of birth. This is linked. So your investments is the current portfolio value that we just went over. And then over here on the side, you can put in your monthly contributions. This includes company match. It's a wild company match. So this is what we invest per month. And I leave M1 Finance at 0. It varies a little, but since we're also living on some of the dividends, I want to even things out. So this tool right here shows if you put in $3,600 a month total and your current value is that, and I'm estimating a total return of 8%. This is how old you would be. So I'm 42.2 years old now. And this just shows by age what your value will be. And you can see I have this one bold. This is one of my big milestones that I hope to hit in the next few years, 5, 10, 15 years is that 3 million mark. And there's some specific reasons for that, but we'll get more into that as the years go by. But I like using this tab and it auto updates. You don't have to do anything besides this initially. And you can change the assumptions, 12%, you see the numbers pop way up. If we go up 15%, then, let's look. Why is Warren Buffett so rich? Well, when I'm 90, okay, I won't be quite as rich as him, but I'd have a couple $1 billion. It's just crazy how compound works. But realistically, I like to leave it at 8, just assume an 8% return over many, many years. And I gotta say, in a red market, it keeps my hopes up. It's just fun to zoom out and see how this stuff works over time. And hopping over to the snapshots tab, first of all, you can see that the video title and my intro was not exaggerated. On Friday, September 6th, we had 1.378 million compared to the 1.45 million, an all-time high from the week before ending August 30th. This is Friday to Friday, 7 days. We lost $73,153. Bazinga.
Time to find out where the new dollars landed last month. Portfolio contributions. Besides losing more money than ever in a single week, it's been chill. Let's check out all the transactions.
We're out here on the transaction spreadsheet, and you can see I've sliced out August just to show the activity for last month. I have position by position what I added and what the average cost was. So for the HODL factory, M1 Finance, I put in $150 per week throughout the month, and there was 4 of them. And you'll notice there was 5 transactions, and this isn't shares, you can kind of ignore that for this one. But the 5th transaction was a referral bonus for $75. So thank you to whoever used that. So ultimately it was $675, mostly YouTube money, 600 of it, into the HODL factory. And then IBIT, JEPQ, and schd all came from my money market. I've slowly been deploying my cash into the market. I picked up 22 shares of IBIT at $33.83 per share, and that was a total of $745. JEPQ, I added 25 shares in August at $53.69 per share, and that was a total of $1,342. And then, of course, we're always buying schd. I picked up 30 more shares at $79.64 in the month of August, and that was $2,389. These pickups are from, like I mentioned, either my money market or reinvested dividends. In this case, I think it would have just been from JEPQ that month, but it was a big one, and we'll get into that.
It's time for my favorite section of these videos, dividends received. August is a tame month each year for our portfolio, but we did show a lot of improvement this year. Let's throw some D's on this screen. Ugh.
So to start, I'm showing all dividends received in 23 and 24. And of course in 24, it's only through August so far. You can see that in August of 2023 here, we received $219. Geez, I wasn't lying when I said August is a tame month. This year, we received $1,371. And when I drop this bad boy down, you can see JEPQ paid $853. And I'm not going to lie, I actually confused the big one was September, not August. So that'll be in next month's video. It was
easily north of $1,000. JEPQ went ham in September with the volatility of the market. But this one was just a standard $8.53. The M1 mix stepped its game up to $10.33 compared to $4.86 last year in August. My savings account, that's just the premium savings in Seeking Alpha, $8.64. So it's easier for me to move money around within my account. And then of course the bulk of it is in the money market, and you can see it was at $498 compared to $213 last year. And last year I had a treasury ladder that I slowly rolled into VMFXX. So soon this will be apples to apples. A lot of my cash was actually in a treasury ladder, so the interest reflected in 2022. So it's a little deceptive, but hey, we're still kicking butt. And you can see that in 2024, we have received $19,539 of dividends compared to the entire last year's $21,640. But let's make this apples to apples here. So January through August, last year was $9,100 and this year is $19,539. I think this one's bigger than this one. Yippee!
Now on to the less glamorous part of the video, portfolio performance. It's time to see how our portfolio performed in the month of August. And we'll also zoom out as always as well. Let's go.
We're out on Portfolio Visualizer, where I like to run my back tests. So Portfolio 1 here is my mix. And now my mix is a third of VU and a third of VGT and QQQ. And I use QQQ because QQQM doesn't have the history, but this gives that third of each main category that makes up my modern portfolio. And I like to compare that to 100% VU as the first competition, that's the S&P 500, and then 100% VT, the world stock market, as the second competition. And I like to note here, I don't include cash with any of them because that's on the side. Same with Bitcoin. That really screws up the long-term returns. Like whatever portfolio has Bitcoin in it just looks way better than it is. And that's like one of those hindsight's 2020 things. And JEPQ is strictly for cash flow. So this is my core holding long-term portfolio versus the alternative, what many people think you should hold for a long-term portfolio, being VU and VT. And we'll jump into the August specific stuff. I just wanted to set the stage a little there. For the settings, I have my investing horizon, which is 2012 through 2024. With year-to-date ARN to roughly mimic what I did, very roughly, starting with 85,000 and contributing 2,000 a month. Rebalance annually, reinvest dividends, yes, and display income at the end, yes. So when I hit analyze, see, and you can see right here my mix, this is roughly what I've actually done, and it's at 1.425 million. So that's about what we have right now. It's a little high. I think I have 1.416. And VU in that timeline, instead of doing what I did, VU would have ended at 1.239 million, still pretty darn good. And VT, the world market, like what the Bogleheads like to do, would be at 881,000 in my timeline. Again, no assumptions. This is what actually happened in the last 12 years and change. And we'll get into all the return data down below. I like to zoom out a little bit. You can see on the annual returns, my portfolio lost to both the indices in 2012, and then it won in 2013, 14, 15, 16, 17, 18, 19, 20, 21, barely, 22, barely, and 23. And so far in 2024, it is losing to the S&P 500 and it is ahead of VT. I like to zoom out and see the long-term perspective on this stuff before diving into the specific month. And on the trailing returns, this ignores your contributions and just looks at the returns of the underlying assets. We'll just take the time to look at the full returns. I won't go over all these numbers like I normally do. You can pause and look if you would like to. My mix has returned 16.27% in the last almost 13 years. The market VU is up an astounding 14.71% in that time frame, but beating it by a 1.5%, as you saw above, has a crazy compound effect. And VT is trailing both by quite the wide margin at 10.65%, still seeking its reversion to the mean. And on the portfolio income, this is assuming all dividends are being reinvested. And obviously we're not looking at a dividend portfolio here. This isn't our retirement portfolio. It's more of an accumulation. But you can see with the blue bar here on my mix that the dividend growth adds up over time to outperform both the market and the world market by quite a bit as we get to the more recent years. It starts out with a lower yield back here, but then as you can see, it's cash flowing. The last full year, it did 20,194 versus the market's 15,000 and the world market's 15.5K. So it's good for growing your income as well, pre-retirement. And then of course you'd reshape to different things. And I like to quickly cover mainly the PE ratio. And we're getting a little high, I have to say, at 26.49 with the weighted PE ratio of my mix. And technology is at just a touch under 40%. When we come down to VU, it's, whoa, is that exactly the same? Or no, I think it's a little less. It's basically the same at 26.46. That's really weird. They're always close, but usually not that close. And VU is a little lighter on tech at 32%. So we're about 7% more tech, nothing too crazy. And then when you hop to VT, you're at a juicier PE of 20.91% for the world market. And tech there is quite a bit lower at 24%. So you get better diversity, of course, with the entire world market. Okay, now to what we care about specifically, and we're here in month 8. This is the one we're viewing. 9 just started, and this stuff's historical, so you can kind of eyeball these down if you want. But last month specifically, in August, the market returned 2.39% compared to the world markets, and this is VTI plus VXUS. Basically, it just weights the entire holdings of the world. It's about 40% non-US and about 60% US right now. It was just behind VU at 2.33%. And we can see that our mix here fell short of both of the indices at 1.93%. And within our mix, it looks like Schwab did a little carrying at 2.36%. And our tech-heavy funds of VGT and QQQ came in a little lighter at 1.05% and 1.1%. And then, of course, the market, VU, was what the market was. So we always have that as a third of our holdings as well. So we underperformed in August by 0.46%.
We're still working on catching up to that elusive S&P 500 this year. Our modern 3-fund portfolio is seeking its 12th consecutive win against that benchmark. Looking ahead, a few extra things are on my mind outside of the boring target allocation strategy that I always harp on. I'm still addicted to the cash flow that JEPQ provides in my specific situation. You normally shouldn't buy things like JEPQ if you're in a regular accumulation phase. We need more cash flow in our specific situation after I left my career to start this channel, so we've been loading up a little bit more comparatively on JEPQ compared to the money market. We know the money market will get less lucrative in the coming months. Never make a move like this if you may need the principal amount in the near future. JEPQ does not replace cash or a money market. It's not a cash equivalent, and it definitely does not replace an emergency fund. So be sure if you do something like I'm doing for cash flow, whether it's JEPQ or anything else, be sure that you have the basics taken care of before doing something like that. I'm also going to be changing my buy-sell thresholds on iBet. I currently have those thresholds at 2 and 3%, meaning that if the allocation gets below 2%, I buy more to get it back up to 2. And if it gets above 3% of my overall portfolio, I sell long-term capital gains to shave it back down to 3. I'm gonna change that, I think, to 3 and 5%, respectively. I still don't know if I believe in Bitcoin long-term, but I see potential profit somewhere along the lifespan. Check out one of these 2 videos if you like what you're seeing from the channel. I appreciate you sticking this out till the very end. We will win this simple game if we build a quality system and stay the course. Temperament trumps intelligence by a country mile in the investing game. Thanks for watching, and I will see you here next Sunday, too.